Okay, so lesson one we talked about, we finished with predicting pullbacks. And second subject that I wanted to tell you about, even though we're talking about pullbacks, um, how about pull ups? Okay, so if we're seeing right here where we had our swing, right? We had our swing. I'm going to go to the beginning because it's a better example there. So we're right here, and I'm going to do an auto fit to see if we can bring that down. There we go. Okay, so we talked about pullbacks, right? And I wanted to cover the subject of possible pull ups. So, what I'm going to do is take this auto off and try to show you an example. Okay, so if this was a swing heading up right here, from here to here, that was a swing, right? Now we talked about the pullback, swing, retrace, retest, and you can see right here the swing went up and it retraced right here, right? Now, by the way, we have some more horizontal ray lines in here. You can see them. There's a red one and there's a yellow one. And what I do as a rule is once I call them overlapping. What we see right here is a Fibonacci, and somehow, some way, a Fibonacci from back here overlapped right here because I can go in. When I see that, when I place a Fibonacci there in that area and it's close to this white line right here, that is an indication that that area right there has hit once before. And if it hits more than once, it becomes red. Hits more than twice, it becomes green. And if it hits more than three times, I'm sorry, yellow. If it hits more than three or more times, it becomes a green light. What is a green light? It means it's a go. It's a really strong possibility that that's a reversal signal. Yellow is caution. It is possible as well. And the red is also a strong possibility, way more stronger than just the typical white ones, which are our reversal signals as well. We use them, but these are stronger ones. So I just use the red light, yellow light, and the green light concept. And that's all part of the don't make me think strategy. Okay? So we talked about this pullback right here, and you can see it swung up here, pulled back to the second possible support and resistance, right? And then we can see that it pulled all the way up. Again, we don't really use this one, However, because there's not a lot of data in advance, you would have had a way. Again, I'm only giving you in the basics. You're learning one strategy, but there's a way of being able to understand. Now we do see what is called a possible flag right here. See that pattern? There's a pattern in there. So we can say that this market is consolidating for a bigger move. Something's about to happen. Notice what we're doing when we're looking at all these support and resistance. We never clicked over it at any point and looked at what is called our other indicators. So let's open this up and see where we're at here, right? We were talking in this area of, I believe it's, say, 26th of May, 2021, right? So we're going to come over here and let's open this one up. And let's go to the 26th of May, 2021, right? And how we do that, remember these arrows kind of gives us the moves and we can kind of move. So let's do that. Let's just see if we can, here we go. Here's May coming up right here, right? Okay, May 26th. And let's go get another two size of arrow. Remember when we said at one point we need to get the cross. So we have the cross. We have 26th of May right here. What are we looking at? Well, I'm trying to get you down and look at this one. Look at that stochastic. Notice that the market is overbought. It's about to cross over. These are reversal signals. They're kind of lining up. The RSI is almost at, remember, the default is 30. Default is 3070. So this RSI went as high as 68. It's there. It's there. But remember, my rule is I like for it to get down to 80. I like my default. So this default needs to be changed. I like to have that default way up here somewhere, right? 80-20, right? This is 30, and I like to say I like to keep it down to 20. But 70-30 is the default. It's okay. We're in the default club today. And what happened right here? Oh, the Mach D crossed over. See that cross right there? That was a strong indicator right there that you must get in this market. These are all lining up where they're crossing over. There's that don't make me think strategy. Guys, you just learned a strategy. Congratulations. You're now considered a trader. You have a strategy, a proven strategy. See it? It's there. See, I told you your eyes was going to open. You were going to see. And then what else did you see? You see a possible double bottom in the candles, huh? Meaning that it has to complete this part to formulate that. So we have a lot of things working on us just in our indicators confirming what? Our support and resistance. See? See how that works? We just use that to confirm that this is a go. This trade right here is a go. And now we have our support and resistance lines to tell us an indication where we should get out. So if we were actually up here and this market was turning down, this would be our first take profit point, right? And if it broke it, we could say, you know what? Since there's a yellow light, why don't I just take profit here? Look at that. Market scared you a little bit. It did go up. But if you would have stayed with this market, right? Look at this. It went as far as here. And let's count the days back. This 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days. 13 days to make a powerful move. Man, that's, I don't know. I can, well, let's see how many moves that is. Let's do this. How about we just click right here at the highest of the high, right? And bring it all the way down to where our yellow line is, right? This was our take profit. Wow. Looks like to me I see about, well, um, let's do this again because what's happening is we talked about the amount of days and the thing about what I like about this ruler is you can click on the highest high, right? Right here. And then you can take the ruler to the part that, since it appears this, we would have probably even continued. But right now, our take profit was, we're not at the green. Green is way down here. Right now, we just said the yellow, right? And we talked about it being a 14 days. So right here, okay? So this was minus 426 pips. Pips is points in percentage. Points a percentage is the amount of points. And depending on how many contracts you bought, how many stocks you bought, this could have been $10 a stock. This could have been $20 a stock, right? But we know if you multiply 10 times $426, that's $4,260 just off this move alone. Just off this move alone, assuming that you bought maybe 10 stocks, you had 10 units, 10 stocks, 10 lots, whatever they calculate, depending on what you had in there. Even if you had it moving for $1, that's $426 you would have made in 14 days. You know, now considerably that you can get more than that on a job, but considerably, let's just say you have 5 or 6 trades working for you, and within that amount of time, this particular one may have made you 500, the other one 1,000. I say that that's a pretty nice little chunk of change for a decent job that you just sit at home with, right? Considerably, let's just hypothetically say you had maybe bought $10,000 worth of stock in this. You know, you're looking at maybe probably 14,000, $4, 5, $6,000. You know, so that's good to know. And then like I said, our reversal signals, um, the, the the direction when it broke the yellow, it continued to go up to the red, then it continued to come back down, but then it broke the yellow and continued to come down to the next one, right? Now, I don't consider these strong indicators because I don't see where my red light, my yellow, or my green light. I know they were possibles, and had it came right here, I probably would have not even got in it until it hit here. Then I would have said, you know what, I'm gonna get in here, And I'm going to ride it up to this yellow line right here. See that? Strategy. Why? Because it is possible. And what happened? And not only that, it went to the red line. But because it respected the last time, I probably would have said, you know what, get me out here. However, if you look, it didn't hit that red line that time, but it did hit here. And remember, the rule is you did your strategy by getting here and getting into your really highest caution. The market told you what to do. Forget about the fact that you lost a little extra more money you could have made. Let that money go. That is not your strategy. The market just told you to get in at your resistance and get out at your yellow light, regardless of it going to the red light and making more money. When you start thinking like that, your eyes are going to become green. You're not respecting your strategy, and this market will hurt you. It will hurt you. So, okay, I hope that we just kind of overviewed, tied in a strategy. We also looked at our indicators, um, and again, we're not the indicator we looked at over here was May, but we just used it. And if we come over here, let's just do this right quick. Right now we're in October. Yeah, well, okay, we're in the same area. We're in the same area. October, November, that's where we're at. Okay, here's October, November. And we can see right here by comparing them, we see the crossover and we see the area that we were speaking about. So I'm just going to kind of open this up because this is what we're talking about in terms of the market. Okay, now, so we covered a lot of, color coding. We talked about the red light, I just call it red light, yellow light, green light, but we know that's horizontal rays, right? So we know we talked about putting in an order. An order is basically you placing an order in what? In this particular platform, right? And you see where this says orders? That's where we would have made our order. And I'm not going to go into this right now because on the next chapter is going to be completely about this whole or OANDA. But I want to do it when the market is open. So you'll have a better understanding of being able to view a lot of this. So we're going to talk about that later. I'm going to close out of that. But I will tell you that this is where we make our orders, right? Um, and if we said that this is a potential exit right here, right? If the market was going down, but however, this yellow one was a strong pullback, this would be where we would have entered right here. This next line right here could have also been a potential stop loss. Remember, we talked about going just a little bit above it, below it. And look what happened. Let's magnify that. That is an excellent site to look at right quick. Let's just do that. So what we're going to do is we're going to just magnify this a little bit and just look at it. And you see that? This was our stop loss, right? But we used the theory to go a little bit below it, right? So it would not have kicked us out. So this is our stop loss right here. And however, it may have kicked us out. Maybe we wasn't far enough down. Maybe we were scared to lose. Maybe from here to here is losing $25. Are you okay with that? Because remember, I told you you're going to lose 30%, 70% return. That's your goal. That's not guaranteed either. But however, that's a goal, right? Because the market has to turn in order for it to go up. And if it does, if you're not losing money, read my lips. If you're not losing some money in this market, you're not doing your strategy. You're not doing your strategy. Okay, so we see right here. Now I'm kind of going back, and maybe I can open this up a little bit more. That the market did go up, and we did know that we talked about this being our potential exit, the red, right? So let's just blow that up. Did it touch it? Do we know that it hit it yet? Let's look at it. All right, where were we at? Right here, right about right there. So let's look at that, and maybe in future it looks like it did touch it. Right there, it is. But if it didn't, maybe we want to get out just a little bit below there. Same way we do our stop loss. So that's what we mean by stop loss is the pullback. Pulling back, making sure that it doesn't go past. This is where we were supposed to get in. It peers past to this one. We may want to put the stop loss a little further to give it time. Again, in advance, you would have had an idea how far that pullback would have been precisely, a little bit more than what you have here. So that's why it's, to be safe, I would have went to the next level, maybe 2 levels down for your stop loss. Then boom, it shot back up to the red. Boom, got you in. Or maybe you might want to say, you know what, I'm gonna get in just a little bit below that because if it is a stop loss, let's put it right here and make this our stop loss. Let's put our take profit right here, even though this is a go right here. Let's put it right here and then put our take profit stop loss right here. Okay, so that's the strategy that we're going to use. That's our don't make me think. These are the patterns we're going to look at. Notice that we were in the GPS. We were talking all day long in the stock S&P 500. We know this can be done in the NASDAQ. We know this can be done in the Russell. We know this can be done with hogs. We know that you can do this with, with bullions, silver, gold, platinum, bitcoins. We can do the same strategy. What is our rule for this strategy? Liquidity, volume, volatility, value. And let's look at that for a minute. Let's line this up. Let's line this public. Ooh, look how many people's in there. Remember, this type of line could be a possible billion people making these type of exchanges, right? We only need this to be right here to be able to get this market to do this. Swing, retrace, retest. That's volatility. Swing, retrace, retest. Liquidity is the ability to get the money from not having it in a 6-month Apple account or a 2-year Bitcoin that if you take it out, it's going to be hard for you to get back in. Remember, this is day trade. We're only in the market. How many days? This was a 14-day setup. The longest we hold a trade is 2 weeks. It's stretching it, but we got it.